Hey, welcome back. We are not in the Jeep. As you can see, I'm at my Wisconsin place today, and I figured I'd punch out a quick video. By the way, you guys have been making a ton of comments requesting videos on different topics, which is awesome, but it's going to take me a while to get through all those videos. So just give me some time. I'll do the best I can to come out with different videos on different topics. This video, I wanted to talk about different things I've invested in over the years, because somebody asked, like, hey, Ethan, you've been changing your strategy. What's up with that? What kind of things have you been invested in? And a couple different things. I'm combining different questions from different people to come up with this talk. And I'll essentially go through the different assets or asset classes I've invested in over the years, why I made the choices I did, and why I pivot like I do. And it's like, some people have said, Ethan, I can't watch you anymore. You're changing your investing direction. It's like, okay, well, then obviously it's not for you. But it's like, there's the saying that says smart money moves, dumb money sits. And smart money moves, dumb money sits, okay? And that means, like, if you see an opportunity, you've got to reach out and grab it. Like, you don't want opportunities to pass you by. And that's why when I see opportunities, hey, I want to move. I want to move. That's one of the reasons, like, I switched from, I made the conscious decision to switch from dividend investing for the next couple of months and move it into cryptocurrency investing, because I want to capitalize on the opportunities that are only available for a short period of time to get into crypto, while we have long-term capital gains tax rates available essentially for investment. So that's why. And if people don't get it, they don't understand, well, too bad on them. I'm not here to teach them to be smarter. It's like, if you don't get it, hey, it's you're out of luck, because I'm moving where the money is, man. I'm smart money. It's like, I'm gonna move my money and make the smart decisions. And when I make a non-smart decision, I do the best I can to pivot and readjust myself, readjust my course, and fix the thing. Because not all the decisions I've made in the past for sure have been the smartest moves, but it's like, I just did the best I can as I learned investing and all that kind of stuff. So anyway, so let's go back to the beginning, so to speak, as to some of the stuff I invested in. And I'm only really going to take you to the point where I really opened a brokerage account or opened an account with somebody or bought a piece of property. And that was really first time I did that. Aside, and this is aside from, like, investing in, like, a 401k through business, through my job, right? So first time I got some real money to invest was around 2010. And 2010, like, it was fresh in my mind what had happened with the financial crisis of '08, and I was in a really defensive position. So the things I invested in, took that into consideration. I wanted to protect myself against a future coming collapse and a major recession like we saw with the financial crisis in '08. And so my investment decisions reflected that. And so I got into things like precious metals, farmland, some real estate, and some defensive stocks that I thought were defensive. And so that was kind of my mix at the time that I got into. And I kind of stayed there for a while. I stayed there for a number of years. I ended up changing course. It was after I actually started the divorce process. My divorce lasted years. I was in a really contentious divorce, filed for divorce in 2015. I don't think it was settled until about 2018. And at that point, I found myself having a negative net worth in the millions of dollars. I had to do a huge payout to my ex, and that really set me back. So I had to repivot and just change things up a little bit. I was left with a little bit of stock investments, a little bit of precious metals, a little bit of other investments, but I had to pivot and I had to change what I was investing in at that point. Now, I recognize that once we hit the 2018 mark and I was kind of free, I was investing in a lot of what I was investing in was real estate, commercial and residential, and growth stocks. Mainly, I had some dividend stocks, not a whole lot, but some. But it was mainly performance growth stocks and commercial and residential real estate. I also got into farmland more heavily at that point, because I like farmland. Farmland is super passive. It's got good appreciation and value when you go to sell the farmland. So it's a good deal. It's a good hedge against horrible things happening in the economy. So I like farmland a lot. But I decided it was early 2020 to pivot. and change my investing strategy because I knew that the crypto bull run of 2021 was coming. Now, I had a little bit of money in the 2017 bull run in that cryptocurrency market, but only a little bit. And I really didn't understand crypto. I didn't know the way it worked, the way it moved, all that kind of stuff. And so when, I saw the value of my crypto moon, and I was just under the assumption it was going to stay there. And then it crashed. That was my first introduction to here's how cryptocurrency works. After the bull market, everything crashed. So I was like, oh, damn. But I learned the lesson and I studied cryptocurrency, and I decided in 2020 to basically pivot in my investing and move it into cryptocurrency because I wanted to be there for the bull run. I didn't have a whole lot compared to what I have today, but I had some real estate, and I got rid of the real estate. I got rid of a lot of the growth stocks, most of the dividend stocks, and I basically went all in on crypto in 2021. I did pretty good, with what I had. And I bought my place in Florida for just pennies on the dollar. I'll take you guys there next month and I'll show you, but it's an amazing place for sure. But I got it for pennies on the dollar, and that's because of the wise cryptocurrency investments that I did make. So I saw the power of cryptocurrency and I was like, this is amazing. So after the crash, which I knew was going to come, after the crash, I continued to dollar cost average in to my cryptocurrency investments, and I made huge cryptocurrency investments over the past couple of years. I decided to, about 9 months ago, or maybe 12 months ago, but about that amount of time, I decided to basically go back into dividend investing part-time. I mean, most of the investments that I was doing was in cryptocurrency, but I decided, hey, I want to do this dividend investing. This is important, and I need to rebuild my position and go beyond where I was and get to a really good spot. So over the past year or so, 9 months to 12 months or so, I've been doing that, and I've been focusing on that, and that's been pretty fun. That's been pretty amazing. Some amazing results, especially since the Yield Max stuff has come out, and I've rotated my holdings to focus more on the high yield dividend ETF. So this is traditionally I had been in the SCHD and the Johnson & Johnson, Procter & Gamble, 3M, companies like that, the kind of standard stuff that dividend investors often get into. And I started to learn about some of the higher yielding stuff like SFOL, TLTW, JEPI, JEPQ, all that kind of stuff. And I made investments there. And then as I learned about the Yield Max stuff, I started to rotate into there. And that's kind of been a fun thing to do this summer. And we have a lot of great stuff coming out with ETFs. So it's pretty amazing. But I've decided now to rotate, where I'm putting most of my investments again back into cryptocurrency. Because like I said in the video that I did, I don't know, a day or two ago, I think 2 days ago maybe, that we've got an opportunity if we buy cryptocurrency now to still get long-term capital gains tax rates when it comes time to sell. And so it's sort of like I see it as the last opportunity to get all aboard with cryptocurrency now before that happens. And so that's what I want to do before the end of this year. Now, once we pass January, I don't know that I'll be going into cryptocurrency. I might just switch back to dividend investing, from then on out, at least until we get to the crypto bull run. I'm still undecided about that. And the reason I'm still deciding about that is, okay, if I go into cryptocurrency investments in January, Q1, Q2, Q3, for example, prior to the bull run, I can do well with the cryptocurrency investments. However, I will have to pay short-term capital gains rates. And I'm trying to decide, what is it that I want to do? Because either route would be good, but I have a ton of crypto. And I don't know that I need any more to get where I want to get. Because I've got goals, I've set my goals for where I want to end up after the crypto bull run in terms of, my net worth and all that kind of stuff. And I think I'll be able to make really good progress on improving my net worth after the crypto bull run is over. So I don't know that I need more cryptocurrency, but maybe we'll think about it. I think I'm going to get drawn into the high dividend yield ETFs that are out there. I think that would be fun. It's fun to get that immediate gratification, right? When you buy a dividend ETF, a dividend stock, you get, especially if they're monthly payers, you get a distribution or dividend pretty quickly, and it's fun to get that, fun to see that. And ultimately, that's what gives you freedom in life, is a cash flow. So that's the goal. It's like that's the long-term goal, is to have most of my assets in dividend ETFs and dividend stocks. But I'm on a ride right now where it's like I'm putting most of my capital in place to basically, ride the crypto rocket, so that I can be in a position where I can buy a ton of ETFs down the way, after the bull run. And that's my goal. So anyway, so that's kind of some of the stuff I've been invested in, some of the thinking behind it. I don't own real estate anymore other than my homes. I've got 3 homes. I really only need one, but I like them all. So I don't really see them as like something that I bought for an investment purpose. It's more of a personal investment, as in I enjoy it. I do own farmland. I don't know that I'll add more farmland. I'm thinking about that. Maybe I will, maybe not. I don't know. Farmland is nice. It's very passive. It you don't have to deal with tenants like you do. Or you don't need to deal with renters. Your renter is a farmer, and that's pretty low key. But the yield is nice. The yield is pretty low though in comparison to dividend ETFs, the high yielding stuff that's out there. So I don't know. I'll have to think about that. But it is a good hedge, in my opinion, against economic uncertainty. Farmland is one of the things. They don't make any more land. So if you want something that's going to be around forever and is going to have good appreciation and value, farmland is a good thing to do. I'm not going to go into precious metals unless I really get a hot tip that something's going to take off. I'm not going to go back into precious metals. I don't think I'll go back into commercial real estate, or even residential real estate, just because dividend ETFs, the high yield stuff, pays out way better than real estate. And so, in my opinion, it's much better investment if you're looking for yield. So, just my 2 cents. Now, some people aren't looking for yield; they're looking for a price appreciation. Whether they are growth stock investors or they are, investors in real estate. They're looking for price appreciation. There's nothing wrong with that too. The capital gains rates, you can get long-term capital gains rates, are pretty lucrative, pretty good. But those are just some of the things I've been invested in. Some of my thought processes behind things. Again, like when I see something that I want, I go after it. And if I see a problem with something, I get out of it. Like somebody was saying, like, Ethan, you just bought Clip recently. Like, why'd you get out of it? You're just changing your opinion. What's this all about? How can you change your opinion? It's like, okay, well, if I obviously didn't do the research I needed to beforehand on Clip. All I was doing was learning from a bunch of other people that were saying Clip is such a great investment. And so I was like, yeah, I'm all in. I'll do this thing. Clip looks great. And then after I got in, I started looking at it, and I'm like, hold on a second. This is a bad investment. So I'm out. This NAV erosion looks horrible. And they're basically lying to you on what the actual, real return is, because the real return for Clip is not 55% or whatever they're saying. It's much lower than that when you take into account NAV erosion. But you gotta change things up. You gotta move, and that's what they say. Smart money moves, dumb money sits. It's like some people they're like, I'm only a real estate investor, I'm not going to change. Or I'm only a dividend investor, I'm not going to change. This is my plan, this is my strategy, this is all I'm going to do. And that's fine, but there's nothing wrong with that. Everybody's on their own journey and all that kind of stuff. But it's like the smart money moves, because the smart money makes the most money. So smart money moves to where the most opportunity is. So it's like smart money is moving into cryptocurrency. Trillions of dollars are going to flow into it. It is the best performing asset class out there. Second best, in my opinion, is the high yield dividend ETFs that are out there. And I've done videos on this before. Anyway, I got to run for an appointment. I will see you guys soon in the next video. Until then, you guys take care. Wish you all the best of luck in everything you're doing. All right, peace out.